Well, I think it's more like it does seem like we're headed into a recession here in 2023. The magnitude of that recession is debatable, but I think it's at least a light to moderate recession. Potentially, it's on the order of 2009.
Elon Musk, CEO of Tesla and owner of Twitter, has issued a warning about an impending recession. Since a number of months ago, the richest man on the planet has been sounding the alarm, warning that the economy faces the possibility of a severe downturn if the monetary policy of the central bank is allowed to continue along its current path. In an effort to combat inflation, which is at its highest level in 40 years, the Federal Reserve has sharply increased interest rates over the past few months, bringing the benchmark rate from almost zero during the pandemic to a range between 3.75% and 4%. This was done in an effort to combat the fact that inflation is at its highest level in 40 years. However, a large number of analysts predict that this expansionary monetary policy will cause the economy to enter a period of contraction. The economic downturn will be exacerbated to a significant degree. After 4 consecutive increases of 75 basis points, the Federal Reserve Board is scheduled to convene a 2-day meeting on December 13th and 14th of the previous year. At this meeting, the policymakers are anticipated to raise interest rates by a total of 50 basis points. In addition, the Federal Reserve has released its first set of predictions for each quarter since September. This provides some insight into the central bank's projections for the future course of the American economy over the next few years. The FedWatch service provided by the CME Group continues to indicate that in coming weeks there will be a rate increase of 50 basis points, bringing the Fed funds benchmark to between 4.25% and 4.5%, with a target rate between 5% and 5.25% by the spring, which is already largely reflected in the trading of futures contracts. Musk is of the opinion that it would be an enormous error on the part of the Federal Reserve to announce a rate hike as was widely anticipated. He has just warned that the decision will cause the economy to enter into a recession that is considerably more severe than the one that is now anticipated. In a tweet, Musk issued a warning that an increase in interest rates by the Federal Reserve of the United States would make the current recession even worse. Musk stated that the recession will be considerably aggravated if the Federal Reserve raised interest rates again. This is not the first time that Musk has expressed concern regarding a potential increase in Fed interest rates. Musk had warned a month ago that the economy of the United States was heading toward a terrible recession and that the Federal Reserve needed to cease increasing interest rates. He also suggested that the Fed should stop raising the minimum wage. In 2022, the Federal Reserve of the United States had been rapidly raising interest rates in an effort to combat inflation and calm the labor market. The general view among analysts is that the statistics that the annual rate of inflation has increased at the weakest pace so far this year. At each of its most recent 4 sessions, the Federal Reserve increased interest rates by a total of 0.75 percentage points. What is it that has investors and analysts so concerned? The closing price on Wall Street was lower on Friday, December 9, 2022, as investors evaluated economic data and anticipated a possible increase in interest rates by the Federal Reserve of 50 basis points at the policy meeting that is planned to take place the following week. The Dow Jones Industrial Average dropped by 0.9%, while the Standard & Poor's 500 and Nasdaq Composite Index both lost 0.7%. Gold, too, inched higher as traders looked past conflicting economic data from the United States and awaited inflation statistics throughout the next week for hints on the rate at which the Federal Reserve will continue to tighten monetary policy. After the meeting of central bankers the following week, it is widely anticipated that the Federal Reserve will decrease the pace of rate hikes. However, investors are also concerned that a robust labor market and other statistics may persuade the Federal Reserve to continue its tightening of monetary policy for a longer period of time than was originally anticipated. Regarding interest rate hikes, the coming week will be a critical one for multiple countries. There will also be rate decisions forthcoming from the Bank of England and the European Central Bank the following week. This year, interest rates have been significantly increased by both of the country's major banks. In other parts of the world, The price of oil increased by more than 1% as Russian President Vladimir Putin made threats to reduce production in response to the imposition of a price cap of $60 per barrel on Russian petroleum by Western nations. In contrast to the early 1980s, when the Federal Reserve's sharp rate hikes sparked a severe recession, the economy appears to be reasonably resilient despite dealing with the highest inflation rate in approximately 40 years. This is in contrast to the early 1980s when the Fed's steep rate hikes sparked a severe recession. The robust state of the labor economy is a significant contributor. There has, in fact, been a spate of high-profile layoffs in recent months at corporations such as Google and Amazon. However, those announcements were primarily about laying off employees since the companies in question had hired too many people during the pandemic. In point of fact, the aggregate data demonstrates that firms are still hiring. It is essential to have a sufficient amount of money saved so that you can continue to pay your monthly bills in the event that you suddenly lose your job or face some other kind of unanticipated emergency, regardless of the state of the economy. Because it allows you to see how much money you spend each month as well as where that money is going. Your monthly budget is an excellent place to begin. The powerful United States dollar. The United States dollar is incredibly important to the functioning of the international financial system and the economy as a whole. And at this very moment, it is more powerful than it has been in the past 20 years combined. The Federal Reserve is at the center of the simplest explanation. When the Federal Reserve of the United States raises interest rates, as it has been doing consistently since March of last year, it makes the dollar appear more desirable to investors located in other countries. The United States dollar is universally recognized as a reliable investment option, regardless of the state the economy is in. Investors have an even greater incentive to purchase dollars, typically in the form of U.S. government bonds, when the environment is volatile, for example when there is a global pandemic or a conflict in Eastern Europe. When Americans travel to other countries, having a strong dollar might be a wonderful benefit, but it can be a source of stress for just about everyone else. The value of many other currencies, including the Japanese yen, the Chinese yuan, the Japanese yen, and the British pound, has significantly decreased. Because of this, it will be more expensive for those countries to import necessary goods such as food and fuel. In reaction, central banks that are already struggling to combat inflation caused by pandemics end up increasing interest rates at a larger and more rapid rate in order to protect the value of their own currencies. Conflict, skyrocketing prices, and extreme policies all converge. There is no country in the world where the confluence of economic, financial, and political disasters is more painfully obvious than it is in the United Kingdom. The huge impact of COVID-19, followed by the trade interruptions caused by Russia's invasion of Ukraine, has caused the United Kingdom, along with the rest of the globe, to battle with rising prices. This is largely owing to the fact that COVID-19 occurred. Energy prices have skyrocketed and supplies have decreased as a direct result of the West's decision to stop importing natural gas from Russia. Those occurrences were already problematic on their own. But then, a little more than a week ago, the newly elected administration of Prime Minister Liz Truss presented a comprehensive plan to slash taxes, which economists on all ends of the political spectrum have criticized as being, at best, unconventional and, at worst, devilish. In a nutshell, the Truss administration promised that it will reduce taxes for all Britons in order to boost spending and investment, and, in theory, to lessen the severity of the impact of an economic downturn. But there isn't enough money in the budget to cover the cost of the tax cuts, so the government will have to take on more debt to pay for them. Because of this decision, there was widespread fear in the financial markets, and Downing Street found itself in an impasse with the Bank of England, which is an autonomous institution. The value of the pound fell to its lowest level versus the dollar in nearly 230 years as a result of the widespread selling of UK government bonds by investors from all around the world. That is, ever since 1792, when the Congress of the United States made the dollar an acceptable form of currency. What do you think of our video? Let us know in the comments section below. If you enjoyed this video and want to hear from us again, be sure to hit that subscribe button before you go. Thanks for watching.